Share buybacks are when a company has excess cash and generally they feel that their stock is at a lower value than they think it's worth. So, why would you want to own stock in a company with a buyback program in effect? Buybacks decrease the amount of shares owned by investors, so this increases the value of the shares owned, as there's less of them to divide in the market cap of that company. Buybacks are purchased generally in the open market, which drives up the bidding of the stock and increases its value. If a company puts in place a buyback program, means they are cash flush, and this means your investment is more secure. Let's take a look at 5 companies currently buying back their stock. Number 1, Simon Property Group. Investors are generally pessimistic about consumer spending, and this has caused Simon Property Group to plunge by about 32% from its 52-week high. Despite excellent results from the business, this includes a 170 basis point increase in occupancy at its properties over the past year. Simon approved a $2 billion stock buyback plan, about 5% of the current market cap, and has repurchased nearly 2 million shares in the past 2 quarters alone. Number 2, Ally Financial. Shares of auto lending focused Ally Financial have declined sharply in the last year, as general economic pessimism has investors worrying that consumers will have trouble paying back their auto loans. However, Ally remains an extremely profitable business and has been aggressively repurchasing shares for years. In fact, Ally's outstanding share count has declined by 32% over the past 5 years, including 12% in the past year alone. If Ally can navigate the challenging environment, these buybacks could be an excellent driver of long-term shareholder value. Number 3, Nextdoor. It's somewhat rare for an unprofitable business to allocate a large chunk of capital to buybacks, but that's exactly what neighborhood social network Nextdoor is doing, with shares trading for about 75% less than the company's special purpose acquisition SPAC IPO price, which is the price institutional investors paid. Nextdoor announced a $100 million buyback in May of this year. Number 4, Moderna. Moderna became an extremely profitable business when its COVID-19 vaccines rolled out and is using much of the billions it generated to fund a massive pipeline of other vaccines in development. This could pay off tremendously over the long run, but management clearly sees opportunity with the price down by about 55% from its 52-week high. Moderna announced a $3 billion buyback program early in 22, and then another $3 billion in August, which it's working on now. Combined, these represent roughly 10% of Moderna's entire market cap. Number 5, Empire State Realty Trust. There are a few industries that have more investor pessimism right now than office space, and this has caused Empire State Realty Trust's stock price to remain depressed since the COVID-19 pandemic started. However, the company's results have been excellent recently. Occupancy is actually increasing. Management clearly sees value in its stock. From March 2020 through today, Empire State has spent $200 million on buybacks, and the company's entire market cap is less than $1.9 billion. In conclusion, the most wealth is created in the markets when buying depressed assets at depressed prices. As always, this isn't financial advice, and I would expect you to do your own due diligence. However, I am invested in all of these companies myself. Thanks for watching, and please subscribe to my channel, as it helps the channel out tremendously. Smash that like button and hit the notification button so you don't miss any future videos. Thanks a lot.